S&P 500 as we get ready to trade October week 2, progressing into our second week of Q4 2020. On Thursday, we had rallied all the way up to a look below the September halfway back and another look above the February Q1 high, all-time high at the time, before we rolled over and sold off 1,200 points to the 2020 low. That's at 33.9352. So we've kind of gotten hung up around in that area from the February high to the September halfway back. The September halfway back is an important level. One, because it marks the, just below the 3,400 level. And two, because September was such an important range, 35.88 all the way down to 32.09. That's kind of like the deepest correction we've seen since that one in the first quarter. So if we can't get through the September halfway back, if we come up here and fail one more time, I think that that's a rally you could sell into for some puts that would probably get us a test all the way back down here to at least the 100-day, if not retesting the September low. And if the September low were to break, we talked a lot about what's going to happen there as we got into the end of September. And when the time comes, I'll go over it again. But for now, I think that if we get a rally up that fails and doesn't make a higher high over the one we made on Thursday, that's probably a chance for you to go look at some good high strike that you can afford puts for next Friday, October 9th, and see what happens from there. If we come in with another gap down, perhaps if we gap down and break the 10-day simple moving average this time, and it's going to be coming up here, it's going to be right below the support for this gap that we have back to the September 25th close. If we come in and break the 10-day simple moving average, that really sets us on the move again lower. I don't know that this gap filling would be enough. Maybe it would be. Maybe we just look below the 10-day, maybe look above this gap fill in reverse and start rallying back again. But keep that in mind. This area here around 32.98. So, if we can't get back below 3,300, that's probably a dip you should buy, and that could probably get you 100 points all the way back here to 33.98. So that's really what we're struggling in. We've got a gap above us, a gap below us. This gap fills and leads us, to try and get up through 33.98. Excuse me. This gap fills, and if it fills and we break below it, it gets us back down below 3,300, looking towards the low 3,200s. In the middle, of course, like on Friday, we might just get hung up in a range here between Friday's high and Friday's low and trade a couple of inside days. And if that happens, that's the market resting and waiting for the signal before it ramps up higher. That's just digesting the move up that we've made, because you can see that we've kind of made this move up with this big gap below us, and as long as that gap keeps holding open, and we just digest in the middle of it between the 50-day and the 10-day with the 20-day in the middle, that's just digestion before we take off running. So don't get yourself too committed to the downside if that's the way things turn out. If we just come in on Monday and we trade inside this range, waiting on some news of Trump's condition or whatever economic data we've got coming out this week. I think we have the Fed minutes, in fact, this week. I got to double check on the schedule, but that could be something, that maybe we're waiting on. At any rate, so we just need to know where our 50-day simple moving average is in the morning, where our 20-day and where our 10-day is. I'm looking at the 10-day, and if it keeps curling up like this, it's going to be right around just below Friday's low. The 20-day is falling, but you can see there's a little bend in it here, and it's going to flatten soon. And the 50-day has been rising, and that's going to be above, but it's going to be probably right in here, just below Friday's high when we come in. So I'll let you know what those are, or you can look for yourself on a daily chart, and those will give you a good idea of where things are at. I think if we come down and we keep holding the 20-day, that's probably a long buy, but nothing's going to work until we get over Friday's high. And if we come in and we break down below the 20-day, that's probably a chance for a short. But until we break down below Friday's low in the 10-day, that's not going to get you anywhere either. And like I said, there's a good chance that we could just be sitting in the middle here and digesting for a couple of days before maybe we get in front of those Fed, to the front of the, right before those Fed minutes come out, and maybe the market starts rallying ahead of that or starts selling ahead of that in one way or the other. Okay, that's it. Hope you have a great rest of your weekend. Hope this video helped you out. As always, good luck and good trading.